Welcome back. You're watching Your World at 10. We're coming to you from the World Economic Forum's annual meeting here in Davos. One of the questions that we've often tried to answer on this show is, where are crude oil prices headed? That's a question that business leaders from across the world are also focused on, because if there's the sign of even the slightest recovery in the global economy, there is also the possibility that high crude oil prices might put the brake on that. Well, earlier I spoke with Fatih Birol. He's Chief Economist and Director, Global Energy Economics Directorate at the International Energy Agency. He had some fascinating insights into how he expects the crude oil market to behave this year, where prices are headed, but more importantly, the role of the US in energy supplies in the course of the next 5 years. Listen in.
When we look at the 2013, I see Europe as the weakest part of the global economy.
Okay.
I have a bit of a question mark, but I have still also some optimism for US recovery.
Okay.
And I expect that China, India will still grow significantly, 5-6% in India, perhaps 7-8% in China.
Right.
So these are very good news. However, there is one major question mark, namely role of energy in the global economic recovery. Today we have about $110 oil price, the Brent, and I believe as such the high oil prices are playing a role of a handbrake for the global economic recovery. And I would in any case expect that the prices in the year 2013 would remain at these levels, around $100 or so, and which is definitely not a very good news for the energy importing countries such as India. And it will be a very good surprise if the prices go below significantly $100.
So we've seen, given that the OPEC controls pricing to a large extent, that there has been considerable opposition amongst many OPEC member nations against Saudi Arabia pumping extra surplus oil over the course of the last several months. That is what has helped keep prices where they are. What do you expect will be the stance of the OPEC this year, and hence how will it impact the ability of Saudi to continue pumping surplus oil and at least keep prices here, if not move them lower?
Saudi Arabia is the central banker of the oil industry, and they played an extremely constructive role in order to comfort the markets in the last few years, and I expect that they will continue to play this role. I also expect to see a production growth coming from Iraq significantly, which will also further comfort the markets. We also see a growth coming from oil production in the United States as a result of the unconventional oil revolution in the United States. These are the factors which will comfort the markets, but the demand is also very strong, coming from China, coming from India and Middle East countries themselves. So as a result, I would think that the oil markets will be staying around $100, and if there are some further geopolitical tensions in Middle East, this will definitely be unwelcome news as far as the international oil prices are concerned.
What is your outlook on geopolitical tensions? We've seen them persist through the course of last year, and several of those issues, for instance, whether it's in Egypt or the standoff between Israel and Palestine, or now the ongoing issue with France and Mali, they continue to, in a sense, put upward pressure on prices. How are you factoring this into that $100 range that you spoke about?
I mean, I am not an expert on the geopolitical developments, but what I would say is that further developments in the very region where bulk of the international oil reserves are, the more there will be upward pressure on the prices. So if it goes higher than these levels, the prices, this is definitely not a very good news for the oil importers.
But if the tensions persist, do you expect prices to move higher from the current band they are in? And add to that the fact that I just spoke to a renowned Chinese economist, Dr. Fan Gang, and he said he expects China to grow between 8 and 8.5%. So if we were to put the geopolitical tensions along with, let's say, buoyant growth in China, are you saying that the more realistic expectation is that prices will exceed $100 or maybe even $110 on Brent?
I hope not. There are factors which will push the prices up, such as the higher than expected growth in some key countries, geopolitical tensions, but there are some factors which could bring the prices down, such as the European economy being so weak, and it is spillover effects.
Okay, but if we start seeing a stabilization in Europe, maybe not a recovery, but a stabilization, then you think the chances are higher that we'll see more than $110 on Brent?
I really hope not. This will not be good news, because this itself could slow down the stabilization of the market, because Europe imports a lot of oil and a very high oil import bill, and Europe also imports a lot of natural gas whose prices are indexed to oil prices as well. So therefore I wouldn't expect a strong European economic recovery if the prices remain very high.
In your recent report, you spoke of medium to longer term trends in terms of energy supplies. One of the highlights of that report was that the US will become an energy surplus economy in a few years from now. Share with us more your assessment of that. Is that going to be only on the natural gas front? Because there are certain restrictions on being able to move that natural gas to other parts of the world, or do you expect that there will be enhanced oil production as well?
I expect that US around 2017 will be the largest oil producer of the world.
Largest oil producer of the world.
Exactly, overtaking Saudi Arabia. And in a few years of time, around 2015, the largest natural gas producer of the world, overtaking Russia, which means within 10 years of time, United States will be the #1 oil producer of the world and #1 natural gas producer of the world, which will have major economic and geopolitical implications.
Before we come to the implications, on what basis are you expecting them to become the largest oil producer as well as natural gas? We're fairly conversant with the kind of reserves the U.S. has, but give us an insight into the kind of investments the U.S. is making when it comes to oil that will propel it to become the largest producer.
U.S. conventional oil production was declining years and years, and now with the technology, which is similar to technology used for natural gas, which we call the fracking technology, we see an increase in the U.S. unconventional oil production, which brings significant amount of returns when the oil price is around $75–80 per barrel. So as a result of that, we have already seen this declining U.S. oil production trend is making a V trend and going up, and this to continue if the prices remain at these levels and even a bit lower. So as a result of that, we expect U.S. to increase its production significantly.
Okay, let's now talk about the implications, as you pointed out, of what happens when the U.S. becomes the largest oil and natural gas producer in the world. That takes away the strength of the OPEC and clearly puts the Middle East at a big disadvantage. What do you think the outcome of this will be?
I think the U.S. will be a major oil producer, but Saudi Arabia, other Middle East countries will be still huge exporters. U.S. will produce a lot of oil, but they will use a lot of this oil at home and will not be an oil exporter, but Saudi Arabia will still continue to export. Iraq will export, but the main implication will be on the different countries' competitiveness in the global economic area. So U.S. will have a lot of cheap cost energy, which will give a revival to U.S. economy, whereas Europe, Japan, they have a high cost energy, which will be mainly a problem for the economic recovery efforts. I would expect that as a result of cheap gas, as a result of domestic oil, United States economy will see a strong revival in the next years to come, lower current account deficits, stronger US dollar, and we may well see a strong comeback of US economy in the next few years.
It may not be a big exporter or an exporter of oil, but can it become a big exporter of natural gas?
Oh, definitely. US has all the potential to export gas. I expect before 2020 we will see the first volumes leaving United States to go, but it is up to US government, US people to decide whether or not they will use their natural gas for different purposes at home, or they want to export, which is much compelling for them, they have to decide. But the potential to export is definitely there.
Would the economics of transported natural gas work for countries which are energy deficient like India? We're very far away on the other side of the world, but I'm trying to understand what this means for countries like India, which import more than 75% of its energy needs.
For many countries, for many importers, the very fact that in addition to the traditional gas exporters such as Russia, there are new countries, producers coming in the market, such as Australia, coming very strongly. United States, we just saw Canada is coming again. It is very good for countries like India. It is like you are in a street and there is only one supermarket sells the milk at a certain price, at a certain quality. Now suddenly there are 4 or 5 supermarkets. There will be a competition between those two, and you will go, I will go to look for where the milk is the cheapest. I will go for that one, to the best quality one. So we will have, the importers have more cards in their hands, which makes them much stronger vis-a-vis the exporters. So this is a good news for India and the others.
Excellent. Dr. Birol, final question then. You mentioned the growing importance of the US in the energy supply market. What will this mean for the determination of prices? Till now, prices are tightly controlled by OPEC because it constitutes the largest exporting set of nations. Even if the US decides not to export its oil or not to export to large quantities of gas, it will still have a key say in pricing. What will it mean for pricing?
The production growth in the United States come from the fields which are rather complex fields. Complex fields mean you need higher prices to make the investment in these fields profitable. Right. So in any case, you will need about $80 or so, even in the United States, to see this production. Therefore, for the importers, to give a good news to importers, prices will go down substantially. Will not be the case, I would say, unfortunately, for India and for the other countries. Right. We will still we will still see higher prices. As we discussed last year, and I still maintain the view that the era of cheap oil is over. The energy importing countries such as India try to find out the base of